Good afternoon, traders, and welcome to this week's weekly market analysis class, Monday the 18th of June. Before we get started, as always, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay, let's have a look at what's coming in store for us this week in terms of data. Just a couple of quick comments on last week. From the US, FOMC was the major attraction or the major highlight of the week, and the news there was that not only did they increase the rates, but they also paved out a path for more increases for the rest of the year. So as a consequence, the US dollar has had a strong Friday and Thursday and has made quite a bit of in-ground against most of the majors. The pound continued to drop and not underperform, although it did have some stronger figures, but towards the end of the week, but that all happened at the same time that the USD gained strength. So I guess on a positive side, it didn't fall as hard and it held its ground, and we'll have a look at some charts shortly to see how that one fares for this week. But that was the major highlights from last week, so let's focus on what's coming up this week. And the most significant news is coming from the UK this week. That happens on Thursday, and basically we have they are announcing their monetary policy statement. Will they increase their interest rates? Look, the prediction is most analysts are thinking no, but the vote's going to be crucial here. Let's see how that pans out. Are they getting closer to pulling the trigger to interest rates rise, or is it going to be delayed and perhaps even delayed till next year? So that's on Thursday from the UK. From the US, we have building permits on Tuesday and crude oil inventories, as well as Fed Chair Mr. Powell will be speaking. And the other significant news will be coming from Canada in terms of data itself, and that we have the CPI numbers and the retail sales from that sector. So that's pretty much all we have. There's nothing significant from the US, from the Aussie side, should I say. I think in terms of data itself, possibly the currency that's going to be under the spotlight the most this week is going to be the GBP USD, the cable, and so look out for that one. As always, the times that I'm showing you guys is in my local time, which is Australian Eastern Standard Daylight Savings Time. Alright, let me bring forward my charts and let's analyze the markets. Let's see what we've got happening, and we'll kick off with our Aussie dollar. Now, as I was speaking with you, I think there was a public holiday last Monday, but 2 weeks back we were looking at this zone in here to see what might happen and could we get an opportunity. Now, if I go back and zoom in there, the opportunity came a little bit on the late side. It was actually these two candles here which produced the inside candle for us. Consequently, the market went down. It still held on that level. It was a little bit delayed based off that line. Sometimes the market is not quite perfect, but nevertheless it did play out for us just a little bit on the late side. So if you did not take that, well, I can understand that. It's excusable. It doesn't look like what you would normally expect. Now, looking forward, and as I look at today's chart, I can't help but think instantly I want to see what's going to happen in this region over here, and will I possibly get an opportunity to try and trade off a double bottom. The market's coming from up, it's coming down, and we are at this level right now. So effectively what we're looking for is, I'm looking for a nice inside candle pattern. I don't have it just yet. This candle has gone lower than Friday's, so should this candle finish up something like this, for example, and then tomorrow's candle something like that, well, then we would be set and ready to take that trade in this direction. So that's the Aussie dollar for this week. It looks like a nice double bottom opportunity. As I zoom out, we can see that the market's it's been a while since it's been down there, so I think that is a valid trade setup. So let's wait. We need to wait for today's candle to complete, tomorrow's one to complete as well. So this would at earliest be ready would be on Wednesday. Okay, unless today's candle is an engulfing candle, and then it could be ready tomorrow. Alright, let's have a look at the Euro USD. I can see from the markings of my chart that we were looking for some kind of sell in this direction, and when I look at these candles over here, we never really got the setup, so that's unfortunate. So even though the market did fall, it's unfortunate that we didn't get that setup, but let's delete that now. When I look at this one now, this too could possibly setting up for this double bottom region. Let's just pencil it in. We're not that close to it, but let's just mark out the region, see what happens. The type of trade that I'm possibly interested in is if we get into this area to try and hit it that way, as long as I get the price action that I'm looking for. Okay, don't just trade off a level. Trading off a level without the confirmation is definitely the probability a lot lower, a lot more risk on the table when we do it that way. So other than that, Euro USD doesn't really show us anything. That's what I've just drawn is what we're looking for. Let's move along. Let's have a look at the US yen. Okay, let me just zoom out. It's not the prettiest of channels, I must say, but nevertheless, we do have good touch there, a touch there, we have a touch here, a touch there. So I guess this is what I'm looking for. We are getting closer. One thing that I will say about the US yen, with interest rates increasing in the US, and of course with the Japanese yen having negative interest rates, the interest rate differential between the two currencies starting to get on the larger side, which definitely introduces the carry trade, and the carry trade is definitely a lot more attractive now. So people who even if you don't want to put your money in a bank and just try and get bank rates, having a carry trade effectively gives you an interest rate differential in your favor as long as you are long. So the rule for that, just in case you don't know, let me just summarize it for you. If the first currency has an interest rate which is greater than the second currency's interest rate, and if you are buying, then you will receive, okay, then you will receive swaps. That's what I'm talking about. You will receive swaps. Okay, so that's basically the way that it works. If the interest rate of the first currency is greater than the interest rate of the second currency, so in the case of the USD JPY, USD I think is 1.75%, JPY is negative 0.1, so it's definitely greater. If you buy, then you will receive swaps on your account. Okay, so when this interest rate differential starts to get even larger, it starts to attract people who are happy to keep a position long term. If it goes up in value, it's a double bonus, but they're receiving interest rate every night they're holding that position. So we will see a natural push to try and carry this one forward, and that push is coming from a different beast or a different type of investor who's specifically looking for that carry trade. Alright, so other than that, on the US yen, the trade that we would be possibly looking for is when we get to that line which we've marked out, let's look for some kind of price action and let's see if we can get something, and then I would be interested in that particular setup as I've shown you. Let's have a look at the US CAD. Oh, okay, this one's set right now. I've got 1, 2, at the top I've got 1, 2, and this is my third touch here. So let me zoom in. That's an ascending channel. Okay, very, very simple here. What I'm looking for over here is an inside candle or an engulfing candle, a hanging man, something along those lines, and then that will give me the price action reversal pattern that I want. If I get that, and at the moment I think actually today's high has already gone higher than Friday's. Let me just double check. 132.07. It has. Today's candle has already gone higher than Friday, so for this to work out, we may get something. It may look like this, as a red candle, and then tomorrow we may get a candle inside of that one, and then at the break of that, the following day is when you could possibly get this set up. But we are at the correct area, so definitely mark this one into your hot list. US CAD, we are on the fringe of a channel, so I'm very interested in this particular trade. Okay, but we do need to wait for the price action to settle and confirm for us. Alright, so there you go. There's our US CAD. Let's move along. Let's have a look at the GBP USD. Okay, the GBP USD is just still falling. It's fighting now. It appears to be fighting. Is there a double bottom opportunity here? Let me zoom in a bit better. Okay, what I'm looking at is, if I draw a line down the bottom here, let me just thicken that line up a little bit. Okay, so what I'm looking for, we are at the correct spot already. This is today's candle. Very tight trading range so far. We've only been trading inside about 12 pips all morning. Should this become a little inside candle like that, for example, then tomorrow if we break that candle, then I would be interested in taking that particular trade. Okay, so let's wait and see that one out. We are at a critical point, so all we basically need is today's candle to conform, and then essentially tomorrow morning we're in on the GBP USD. Kiwi dollar. Okay, I can see, this is the beauty of marking your charts. Okay, I can see that I've left that mark in there, and when I put that mark in there, the market may have been over here somewhere, and I said, let's see if we can go in there and do something like that. Now, the market has actually done it, and actually now that I see it, oh, we traded this one. This was a trade that we took on the daily call. That was the inside candle here. We traded those two candles. We hit target, but then this candle here stopped me out on the second target. But if you were just going for a T2 target without moving your stops, well, you can see here that this area here is easily twice as big as this area here. So that means you would have hit your target, no problems. Okay, so well, that's good. That makes me feel a lot better. At least we took that trade. That was Kiwi USD. We took that. At the moment, Kiwi USD now, I kind of got to wait. I did put out this morning on the daily call, I put this chart out as a 4-hour chart, just remembering, which looks like this. And actually, if you look at this right now, this is an engulfing candle. That is an engulfing candle. So I've got, at the time of me recording this video, there's 9 minutes, it's counting down, for this candle to complete. As soon as this candle completes, basically we can take that trade ready to go. Okay, and that one I've already flagged it out. I flagged it out on the daily call. So let's see how that one plays out for us. So that one's ready to go. I just got to wait 8 minutes, and then I can basically come and take the trade. Okay, so Kiwi US dollar, and that's on a 4-hour time frame. WTI oil. I was looking before at oil. We had some lines marked on our charts, and we can see here we were trying to find a trade in that direction there. We never got the setup. It got close, but we didn't get a setup. And now on Friday we had this huge red candle over here, breaking through, and today's candle has continued. This is generally a good sign that it would just continue and break hard now. We've missed that, so we'll just leave this one alone for this week, but I just wanted to highlight that for you, and I'll just leave this parallelogram in my chart so that I can remind myself next time I look at it. Let me take a look at gold. You can see both WTI and gold had the big red candles on Friday, and that's because a lot of the money moved out of commodities into the US dollar. So all of a sudden, having money in cash with a higher interest rate becomes more attractive, so the money tends to leave the commodities and go towards the cash when that happens. And it happens in vice versa as well. So when it's times of higher risk and volatility, money may leave cash and transform itself into the commodities, which has a finite amount, like gold, for example. So gold lost ground on Friday due to that US dollar movement. And look, for now, we'll just leave this one alone. What we were trying to do was to pick up a trade over here to continue this short momentum, but we've missed that, so let's just leave that one. And the final one that we'll have a look for this week is the ASX 200, and look at this, it's coming back up to this line that I had drawn up before, so let me just extend it across. I'm interested to see what happens over there. Okay, so let's see if we can get some kind of price action in there, and then I would be interested in this type of trade on the Aussie 200. So there you have it, guys. That is the wrap up for this week. I have recorded today's class because I have a couple of meetings that I could not do the class live, so I apologize for that. If you do have any questions, email us, and I'll be more than happy to address your questions and help you out as best as I can. But that wraps up this week's weekly market analysis class. I will talk to you tomorrow on the daily call. Bye for now.